Hey everyone, so in this new series, we will have a brief look at some of the most important market related news items. If you are new here, please show your support by liking the video and subscribing to the channel. Let's first have a quick look on how the indices closed. S&P 500 closed up 0.86% with buyers stepping in aggressively towards the end of the session. Nasdaq was up 0.39%. And the big winner was the Russell, up 2.13%. Top gainer in S&P 500 was Enphase Energy, while Cintas was leading the Nasdaq. Let's now get into the top 3 news items. So yesterday, a large part of the Francis Scott Key Bridge in Maryland has collapsed after a container ship struck one of its support pillars. The Financial Times reported today that the collapse has triggered concerns over significant financial consequences, with car makers rerouting shipments to alternative ports. This implies that bottlenecks are anticipated, potentially impacting supply chains and causing disruptions in vehicle imports and exports. While this event does not have any immediate consequences on the stock market, it may have an indirect impact due to its potential to contribute to rising inflation. Next up is the bearish view of JP Morgan's chief global equity strategist Dubravko Lakos, who is cautioning investors about the potential end of the 5-month rally in US equities. He continues to point out excessive crowding in the market's top-performing stocks, which could lead to a significant correction. Despite a strong first quarter for stocks, Lakos sees reasons for concern, including the pricing in of positive factors such as corporate earnings, Fed expectations, and potential political outcomes. He highlights historical patterns of corrections following periods of high crowding in momentum stocks, citing recent examples like Tesla and Apple. This bearish stance comes, of course, not as a surprise, since JP Morgan maintains one of the lowest S&P 500 price targets for 2024. The last news item is about the Japanese yen dipping to its lowest level in 34 years, with some speculating about potential government intervention to support the currency. Analysts suggest a higher likelihood of intervention if the yen's weakness persists. The recent policy shift by the Bank of Japan away from negative interest rates and yield curve control policies appears to have impacted the yen's value. While a weaker yen has benefits like boosting tourism and supporting the Japanese stock market performance, officials acknowledge both advantages and drawbacks to its depreciation. That's about it. If you wish to dive deeper into the news items, I leave the links down at the description. Thank you for watching.